Good morning, everyone. This is Marshall Giller bringing you the morning comment for April 16th. Well, ECB President Draghi was about as dovish as he could be yesterday. He brushed aside concerns that the bank's quantitative easing program might taper down or even end earlier than expected. No, the ECB wasn't having problems finding paper to buy, and no, it wasn't considered reducing its purchases. It would keep them going at the same pace at least until the scheduled ending date of September 2016, and maybe even longer if necessary, and would allow real interest rates to fall. This just confirms my view that eurodollar can move to parity and below without any official resistance. In contrast, the Bank of Canada was in a relatively confident mood about the outlook. It said that, quote, the natural sequence of stronger non-energy exports, increasing investment, and improving labor markets is progressing, and thought the output gap would be, quote, back in line with its previous trajectory later this year, unquote. That means much less need, if any, for further loosening this year. The Canadian dollar soared as a result, and with a further rise in oil prices, is likely to continue to rise for some time, in my view. So Canada joined the Monetary Authority of Singapore, which Tuesday kept its monetary policy unchanged. So is this the end of the global rate-cutting frenzy? It could at least mean a slowdown in the rate-cutting trend, as oil prices are now some 25% off their lows of just a month ago. Nonetheless, it doesn't mean the dollar is likely to decline. The monetary policy divergence still exists, just not as aggressively as before, because while the Fed's raising rates, others may just be keeping them steady. I believe the dollar is still in the early stages of the dollar upcycle. Now, even though there were two central bank meetings yesterday, it was the oil market that dominated market attention, as U.S. inventories rose much less than expected, and production actually fell a bit in the latest reporting week. The figures raised hopes that the oil glut in the U.S. is coming to an end. Personally, I doubt it and still anticipate a surge in production in June, but technically the market does seem to be switching direction, as you can read in our technical comment on the web. So I'd expect to see further temporary gains, at least by the oil-related currencies, the Norwegian krone and the Canadian dollar especially. As for today's highlights, during the rest of the day we get data only from the U.S. Housing starts for March are forecast to rise, although building permits, the more forward-looking of the two indicators, are forecast to have declined a bit. Nonetheless, the overall trend is consistent with an improving housing market as indicated by yesterday's higher-than-expected National Association of Home Builders Index and the recent rise in mortgage applications. This could keep the greenback somewhat supportive. Initial jobless claims for the week ended on April 11th are expected to come more or less unchanged from the previous week at a relatively low 280,000. This is the week used for the non-farm payroll survey, and so it's likely to support the view that the poor March payrolls were an anomaly caused by the weather. That should help to convince the doubters on the FOMC and in the market that the labor market's improving. The Philly Fed Business Activity Index for March is forecast to increase a bit. And finally, we have one ECB speaker and 4 Fed speakers on the agenda for today. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. And by the way, join our webinar tomorrow for more information. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.